Totally didn't even ask me to wear these. I just think that they're great. So, best swag.
Those are cool shades.
Best swag in the game. So, we went back and forth on this title a little bit, and Anatoly's back for the second or third year in a row. So appreciate you making the trip. And we were talking backstage about the hype cycles of crypto, right? And it kind of feels like there's just a overlapping set of hype cycles depending on which part of the industry you're in, and it kind of like hits at different times. So I think Bitcoin went through a couple of its evolutions, and then Ethereum kind of went through a couple of its evolutions. It kind of feels like you're 1 4-year cycle behind Ethereum, which was 1 4-year cycle behind Bitcoin. But the thing that's always impressed me about you, your team, and kind of the community that you've built is kind of this concept that we keep coming back to and that you've talked about, just eating glass. And I remember back in, actually we met in Osaka at DevCon, and it was in the kind of depths of that bear market, and you guys had kind of struggled through along with the rest of us, at that point that were kind of coming up the curve, and you were just starting to hit your stride. As it was clear that we were just starting to ascend out of like the depths of 2018, kind of late 2019. And I think that culture has kind of like been kind of imbued in the ecosystem. So I want to start there, because it feels like 2019 Osaka a little bit. Like the vibes are a little bit different in the room. It feels like we're maybe on the upslope. How do you think about where Solana is in its evolution? Do you agree with my kind of 4-year cycles? Do you and kind of where do you think the project is versus where you want it to be at this point in the bear market? That's a very open softball opening. I'm going to get a lot harder in a minute, but
that was we have photos from that event where we kind of had our first break point, and it was literally, I think, Labs was maybe 15 people at the time. I think that was the entire crowd with like a few validators at our first conference. And I was running around like DevCon telling people that Solana is the fastest shitcoin as at least something for them to get excited about.
Yeah.
This was a bear market that was, I think, harder to build through because there was no clear use cases that were already live and working in crypto at all. This was pre-DeFi summer. I think stable coins were nowhere near as adopted as they are today. And now we have effectively like these things that we know work, and now it's just a question of scaling them and showing that they're better than traditional finance, they're cheaper and faster. And this is more we're like in the consumer part of the cycle instead of the infra part of the cycle, which is great. I think this is where like the best founders are going to be discovered. Like I think the biggest companies are going to be built now. It's not going to be the layer ones. It's going to be the applications that deliver value to consumers are going to be the biggest companies in crypto, as it should be. And all those founders I think are grinding right now. And it's tough because you rarely just don't see like the light at the end of the tunnel when you're like in the depth of the bear market, and neither did we. We had no idea that we were going to survive, that crypto was going to be a success, and you just kind of build for this vision with a small group of dedicated, kind of like your like tribe, the people that believe in you.
Yeah. So I'll go back to the ETH comparison, which I know you love. Just nonstop talk about ETH on Firesides. But the ETH hitting 80, right, in December a few years back, it almost kind of felt like history repeating itself post FTX, and everyone was talking about, okay, there's this much Solana locked up that Sam has or FTX has, and all this exposure, and then you layer on all of the kind of market pressures just in general that we've all faced. What's it been like navigating that with your team, with the community, the last 12 months basically, and it feels like, and we're going to talk about some of the positive news and kind of the series of I think exciting things that came out the last few weeks, but what not was there any doubt, but like that is an opportunity for some of the other layer ones and some of the other communities to basically come in and take shots at all sides and try to kind of jockey for that position of, okay, if it's not the EVM, it's going to be us, right? So Cosmos or whoever else. What was it like navigating that with the team?
What's great is that like we're a very engineer-heavy community. Labs itself is a very engineer-heavy company, and validators are mostly engineers. The builders are obviously engineers, and engineers generally don't care about finance. So all of these things are like, okay, like whatever. It's like people that are building things generally don't focus on those things because they're focused on a product they're trying to launch to consumers and create value and get traction, and all of those kind of things are kind of secondary effects, which is great. It means like everyone's heads down and building. So from from that perspective, like what was obviously stressful for me as somebody that is deep in the ecosystem and watching everything, it was awesome to see everyone rally and like continue building and shipping products. And like I think even the delta from a year ago, the APIs are better, there's richer data sets, it's easier to deploy programs. The network is obviously massively improved on reliability and performance. And like things are Firedance are cranking. So like we've seen just progress across the board on all the engineering stuff despite the market headwinds.
So the two big things that came out the last month, we're going to talk about the Visa news, and then some of the I guess light controversy because we're all bored with Maker in your favor. But what was I don't want to say surprising in too negative a way, but it was surprising to see the Visa announcement come through and to start seeing some of this like institutional traction on Solana. Because to your point, maybe the engineers don't care, but I think sentiment follows price, and that is kind of a derivative of attention and everything. And so that was, to me, kind of an eye opener in terms of where the tech is, where the community is at this point. Talk a little bit about that partnership, and outside of the headline, what do you expect the proof points to be, and what do you expect the actual usage to be beyond just a press release?
Yeah. So Visa did a bunch of research across all the layer ones out there, and they were, as their research report shows, they were impressed by, Solana's performance and design, and the things that matter to them are that it's really cheap to use the network, and the fees are consistent, and they're consistent because of things like localized fee markets and things that the network implements through parallelism of the C-level virtual machine. These technologies that exist on Solana mainnet allow for somebody like Visa to treat Solana mainnet as like an infra provider, right? Like to send data. Like how I think about these layer one networks is I think of them as communications networks. They're there to transmit data. They're so secure that the data can be money and can represent financial transfers, but it is really bits and bytes. It's a communications network.
Yep.
And it has to be reliable, it has to be cheap and performant. And like I think Solana hits all three of those, and it's awesome to see Visa recognize that and their team to take this idea of using something like Solana seriously for a use case that's going to have real consumers, real businesses receiving and transferring data that happens to be USDC. So that to me is awesome. This is kind of like the next step in adoption. These big companies, honestly, I don't think they really care about the price of crypto. Visa has its own business, they have massive revenues. For the CEOs and the boards and the shareholders to care about crypto at these big companies, they probably need to see like a few percentage points of those revenues to come from crypto-related businesses. I'm not even talking about 20, 30%, but like 1 to 5. Like that would be an early sign of success.
It needs to make the financial report,
right?
It can't,
Right.
Basically, if it's just bucketed under other
right.
financial filing, it doesn't matter.
Like for the CEO to credibly say, hey, I'm making a bet on this emerging technology and it's going to really help the shareholders' bottom line and like the bottom line for the company, they need to show that in revenue, right? Yeah. It's got to happen. I I think for crypto to succeed in the real world and actually show, like, have those impacts, it has to be cheaper and faster and better than traditional finance. It's just, there's no way for a new technology to succeed if it's not that. It's just not going to happen. No matter how much we believe in, like, all the secondary benefits of censorship resistance and freedom to transact and property values, those are all awesome things that are core, kind of the heart of crypto, that why a lot of people will build through the bear market, regardless of what's happening. But for that to succeed commercially, it actually has to be cheaper and faster than traditional implementations. I think for remittances, USDC on Solana is that, 100%. And this is what the use case that FISA is focused on. You can clearly, like, it's just obvious. Transferring USDC in like 400 milliseconds at a fraction of a cent between anyone in the world on Solana is better than all the intermediaries and multi-day settlement and all this other stuff that you do with traditional finance. I think we can get there, honestly, on all finance applications. I cannot imagine, like, the reason for that, I think, is like the thesis of Solana, is that these layer 1 networks should be built such that as hardware improves, they just get cheaper and faster. This is part of software. Every time you build software that scales with hardware, with Moore's law, the service that the software provides starts approaching the cost of the hardware. It just continues to get cheaper and cheaper, and eventually it replaces everything else because you just really can't compete. So network design like Solana, where it just gets cheaper and cheaper to use as hardware gets better and better, it is literally making the cost of finance to be equal to the cost of sending data, which is ridiculously cheap. There's no way traditional finance can compete there. And within 20 years, I can't imagine a world where vast majority of financial operations are not running on public permissionless network with trust minimized compute at the cost, effectively, of sending data to all these computers. This is just a good for the world, right? It's going to reduce the cost of finance for all the consumers. Finance is, at its best, it's connecting people that create value. At its worst, it's a regressive tax. So the cheaper it gets, the better the world gets. And this is what I think public permissionless networks do best. They actually create, you know, these very cheap rails, so value creators that people actually running businesses, creating products and stuff like that, get cheaper services. And this is what we should be doing. We should be building these systems to be as cheap and as fast as possible.
Is that a sustainable security model? I mean, we're starting to hear like 3 different flavors of this conversation, right? And I think it's like a weird switch that flipped a year ago in Ethereum, which is essentially like, oh, fees are good, right? Because it's going to all the validators, and like, you know, it's basically making Ethereum like net deflationary. And then the security conversation is starting to creep back up into Bitcoin because people are starting to realize, okay, the halving is ultimately and very soon going to have an impact on the security of the network, just based on like the cost of mining and everything. And then you obviously have your thesis about, you know, essentially the network security is going to approach the cost of hardware. But is that enough, right, to just incentivize like hardware availability and kind of compute on the network, or do you expect that fees are going to have to get to some point, or you're going to have to capture some value just based on the throughput of the network beyond what is?
This is, I think, the big unknown, and even like the Fidelity report on Ethereum said that there's a ton of risk to trying to analyze these systems this way. And the reason why I think this is a big unknown is because fundamentally security of the network comes from the replicas, the copies, like the copies of the state. It's a very, very like simple way to think about it, but that is really the case. How many copies does the network have? How fast can it detect that somebody else is trying to do something malicious in the network? Those are the security properties of these layer 1s. You know, and it has nothing to do with how much stake there is, nothing to do with economic security. You know, imagine a network like Solana or Ethereum, if 100% of it was corrupted, somehow like an attacker took over all of Ethereum. Circle's nodes that secure all of Circle's stablecoins, this is the only thing that they need to trust is their own validators. It doesn't matter, their own full nodes. It doesn't matter how much of the rest of the network is corrupt, because the rest of that network cannot create a fake signature that breaks cryptography. Circle's nodes will detect that it's an invalid signature and reject it, and therefore their state is protected and what they care about is protected. So from like a business operating in a permissionless network, the only thing that they need to care about is the security of their own infra. And the aggregate security of the network is like all of these independent businesses that all care about their own security and have business reasons to do that. That has nothing to do with stake, has nothing to do with fees, there's nothing to do with tokens. All they actually want is give me the cheapest, fastest infra, and like I will protect my nodes. And if something happens, their node's detected, their pager duty goes off, fire alarms go everywhere, and everyone says, hey, look, something went wrong in the network, let's go look at the data. This is where the fundamental security of the systems comes from. And it's very, very hard to figure out if these are sustainable crypto-economic models. And it's important to figure that out because I think there's a greater good that's created. If you have a sustainable crypto-economic model, you can build something like a self-sovereign store of value, that dream coin that is not controlled by any sovereign entity. It's independent, it's permissionless, anyone can transact in it, and like my family like escaped the Soviet Union. Like I was a kid and I didn't have to deal with it, but like my parents did, and like it's real pain, right? And like anyone that is an adult in this world at least knows somebody that had to go through those kind of failures, and like you should kind of think about it as like 1% chance it happens in your lifetime. So if a self-sovereign, like economically like sustainable thing exists, it's a massive good for the world. I think it aligns with Western values. It's a great export of everything that we love about United States. Like, so I want that to happen, but there's a lot of unknowns. It's really not clear. Like as hardware and software improves, even like Ethereum's design is built around pricing blob data, like layer 2 data, to be actually as bits, not as values, right? Like, and can the network be sustainable as a purely communication network that propagates bits around is a big unknown. I think it is. I think at the end of the day, like these networks provide value to customers like Visa, and they will pay a fee that is, you know, a multiple of the hardware costs. It's not going to be 100x, that's not sustainable, but 3 to 4, 5x is definitely sustainable.
I think there's a very famous memeable picture that a lot of people in the room will probably recognize of Sam Bankman-Fried and Arthur Hayes staring each other down, kind of meeting in a conference. I have to imagine that it's much less exciting, the rivalries between engineers like you and Vitalik, but at the same time, you've seen a couple of defections from like the Ethereum ecosystem to Solana or to a Cosmos fork, or and obviously we had the Maker news where they're not quite building on Solana, but Rune said he might fork the Solana code base, and then Vitalik sold his coin, his Maker or whatever. What, like, did you even know that Rune was going to post that, or was that just kind of like left field?
That was a pretty big surprise and kind of out of the blue. Makers, like.
So you weren't picking off all the DeFi apps one by one. It's not.
I mean, I'm constantly running around talking to everyone in all ecosystems, trying to tell them like, go build on Solana infra. But that was a surprise, and I'm really excited that like go please fork Solana. I'm an open source maxi first. I grew up in the 90s. I got to like, as a kid learning programming, got to deep dive into the Linux kernel and see the stuff being built and developed by volunteers. And there was a really strong ethos of people that are like hacking around on the weekends, being able to take on Microsoft, which is this like massive dominant monopolist that was crushing all of innovation. It was a really cool experience to be part of it as somebody that was like just learning how to be an engineer and learning to love programming. So I think it's very important that these technologies remain open source because we're built on Linux. We're built on LLVM. To create Solana, we had to use open source technologies that would cost billions of dollars to recreate. So like, it's really important for me that Solana is open source, and I love to see that like it gets adopted. Like if somebody is going to fork code and build their own app chain, go use Solana. If you're going to build a layer 2, use SVM. like those things are going to happen anyways. It's much, much better for the greater Solana ecosystem, for even Solana mainnet adoption, that these technologies actually get forked and adopted. And it's a huge proof point. I think with things like Firedancer and having a second implementation built by a different team of the Solana protocol, it's really going to demonstrate that there is very strong, credible redundancy on, engineering bus factor, on like knowledge and understanding of the system. All these things are important, and like safety dramatically goes up, and these are all like really good signs to have in this bottom of the bear market. It really shows that engineers are still like building and thinking about the future and not really looking at charts. And this is how we get to the next bull market, is like people building stuff.
Well, I'm excited to go to Breakpoint. It's going to be a little bit more subdued this year, so I'll meet all of the actual builders and the people that will be around for the next cycle. And I've been meaning to go for a while, so excited to see you in a month. Breakpoint is in Amsterdam next month.
We throw a good party, so you should come out.
Yes. Excited for it. Thank you, Anatoly.
For sure.
For joining us today.